It's time now for some business news. We can cross straight to Dubai to speak with Jameel Ahmad, Chief Markets Analyst at the GTC Group. Hi, Jameel. Take us through what we're seeing on the markets today.
Good morning. We're seeing a little bit of profit taking and some softness in world markets, it does appear. That suggests that some of the positive momentum that we spoke about yesterday following that very strong China data, perhaps it was a false start as we start running for the month of June. I do also take into account, though, that each time we've seen some profit taking or a change of momentum over the past 6 months, it's actually ended up being just an opportunity for investors to buy at lower levels because we have record-breaking and more record-breaking milestones across all different indexes and major markets, not just the United States. So I think that likely this is going to be more of a trend that continues. It's just investors taking some profit over what is very high valuations, and there's no reason for real concern. Having said that, we do have some very key central bank decisions this week, specifically the European Central Bank, and some very key economic data later in the week from the United States. Should the conversation or the tune of the music change when it comes to the anticipation on when central banks might or might not start cutting interest rates, this might encourage more profit taking, but so far we haven't seen this take place widely for the last 6 or 7 months. And I don't think that some of the investor behavior over the past 24 hours is going to change that fact.
Investors, meanwhile, very much awaiting Indian election results.
They are. And the reason why is because, to use the metaphor, not that necessarily India has become the diamond in the rough, but because India's economic growth has been so superb over the past 1 year or so, and actually just before then too, where we're actually seeing a lot of the headlines in the 2020s regarding India's trajectory is actually very similar to the growth story of China in the early 2000s. And we know today how important China is to the world economy. So the projections are that the current leadership will remain in place. Over the longer term, that is more likely or not to be better for the India markets and those asset classes, because continuity is always something that investors prefer. But generally speaking, India is expected to become one of the largest economies in the world. It's already on its way there within the next couple of years, and it will surpass some of the more developed markets that we might focus about more in day-to-day markets. But in the future, we're going to be looking at India even further, and that's why these election results do matter.
And any other key data we should be looking out for today on the markets, Jameel?
We are most likely going to be waiting for the European Central Bank decision on Thursday and the US monthly employment report on Friday. Having said that, we do have some of that preliminary US employment report data coming out today, where we're looking at the JOLTS openings. That essentially suggests how many openings of vacancies there has been overall over the past month in the United States. That does not necessarily mean it's gospel to the employment report that comes out on Friday, but it gives an indication for what the momentum might be for the employee economy. And why is that important? Because the elephant in the room is still the uncertainty over when the US Central Bank will start cutting interest rates. So overall, everything is still linked into this interest rate and central bank discussion and picture.
Jameel Ahmad, as ever, thank you very much for your insight.